tight channel is a setup for very strong trend, so you want to trade as much as possible. Especially for the tight channel, you can trade for the third and the fourth touches. Sometimes you can trade the fifth, depending on how the market works. Here is an example. So the market goes down and then goes up. Here, if you're thinking there should be a second leg down, you need to enter here. However, the market didn't go down further. Instead, it goes up. So this high is higher than this high, and but it is not higher than this high. So at the moment, we still don't know. But at least we have a low and a higher low. We want to connect them. So you have a trend line to prepare. And then the first thing you want to do is to do a parallel, even though we only have one high here. Then you can see that we are expecting if the market goes up, follow these two trend lines, and then there's a good buying opportunities. And then these two trend lines can define a channel. But at this moment, we're not sure. We're just trying. After the market makes another high here, this high apparently is higher than this high. So right now we are sure the market is always in long. And the thing is that this high is following the upper channel trend line. So what we want to do is to wait for the market to go down to touch the bottom trend line for the third time and then trade up. Even though at this moment it's only an assumption, we assume this is a tight channel. The market can break down here anytime. So that's why you have to watch out the market closely. However, in this situation that the market touches the trend line for the third time here, and then it bounces back immediately with this very good bull bar. So this bull bar is larger than this bar and then this bar. That means the strong uptrend. So this is also the signal bar that you can go long. You put your entry at the top of this bar. Even though the tight channel, there's not much room for you to take the profit when it reaches the top trend line. Still, you want to put your entry in to get into the trend as early as possible. Next, let's look at the market behavior. The market touches the bottom trend line and bounce back to touch the top trend line here, and then it reverse. That means here the market follows the channel exactly, and then this tight channel probably will work for the whole day. So that's why when the market goes down to touch the bottom trend line here for the fourth time, you need to prepare to add up your position. If you don't, then you need to get into the market as soon as possible. So this big bull bar serves as another signal bar, so you can go long after this bar finishes. Each time you trade, you can set your profit target as the top trend line here. So for the fourth touch here, you can set your profit target as the top of the trend line here and take the profit. Also, it really depends on your profit target based on your strategy, but the top trend line normally is a very good place to take your profit. So in this chart, after the fourth touch, and it goes up and appears the top trend line and goes up. So there's no going down. But in case the market respects this top trend line again and goes down to touch the bottom trend line, but it bounced back, so you can do the fifth touch. But the probability of this being a good trade will be lowered. And it's lower than the previous third and the fourth touch. Because the market is in a very tight channel, that's why we can trade the third, the fourth, or even the fifth. But how do we know that the tight channel ends? One thing is that here you can see the market goes up and doesn't follow the channel anymore. This is one thing. Another thing, if it goes down, it could be forming a consolidation or trading range here. Like going down to pierce the bottom trend line, goes up to test the top here, and then goes down. So you know the tight channel no more works.